Bonds 101. Is a high yield investment good for everybody? Let's understand this. I'm your learning partner Sushila Hariharan. And if you're interested in a career in investment banking, hedge funds, and trade life cycle, do subscribe to my YouTube channel where we provide content centric videos on these topics. Many people wrongly assume that high yield investments are great investments. So let's understand this in the context of yield. Yield is basically the return that an investor gets, and therefore it does not by any chance resemble only the cost to the issuer, but it resembles the investor's return, which basically means we have to know what is the cost at which the investor is getting. So let's take an example of a bond. A high yield bond is one wherein the coupon rate is as determined by the issuer, but the price is lower than the face value. So when the price is lower than the face value, you must automatically assume that the yield will be higher than the coupon, as many of us have already done significant amount of calculations on yields. So why does this happen? This happens because as the price of the bond falls, the coupon that is paid by the issuer remains the same. And when the coupon paid by the issuer remains the same, the price at which it has invested in is lower, and therefore the yield is higher than the coupon. Such a bond is called as a high yield bond, where the return to the investor is much more than the coupon that is paid by the issuer. This is the case not of comfort, but of being worry, of being uncertain, because the price of the bond has fallen as there is a large amount of speculation and uncertainty surrounding the bond. This could even be a credit event, and therefore supply of the bonds has increased, the price of the bond has decreased, and yields have increased. Remember, high risk investments are those that are good for though investors who have a large appetite to bear the risk that is involved in investing in a high yield investment. There's always a possibility of a turnaround story. There's always a possibility that things might turn around the corner. There's always a possibility that the events might occur wherein the company that is making a loss could become a profit-making company. But it resembles a high risk instrument, and therefore high yield investments are good for those investors who want high risk and do have the capital and the ability to manage such heightened levels of risk.